How would your business be if you could get it to give you better returns than any stock market or bank has ever done ever? That's exactly what today's video is all about. Let's get into it. So the three things we're going to look at today about how we're going to convert your business into something that gives you a better return than the stock exchange or way better than the bank is the first thing we're going to look at is the difference between an investment and an expense. Okay, so we're going to dive into that and break maybe some paradigm shifts around that for you within your business and what's the most important line on your P&L where we actually make this happen. Number two, we're going to have a look at something called the acquisition cost. If I gave you a certain amount of dollars that would guarantee you're going to be able to buy a customer every time, we're going to work out what that figure is for your business. And number three, we're going to look at the lifetime value of a client. How much is the average person who comes to buy with your business going to be worth to your business over the time that they're actually with you? G'day guys, my name's Brad Flynn and I'm the author of Find Your Cash and Find Your Ideal Employee. My channel and these books are all about helping small business owners get really good at running their business. It can be a tough, lonely journey, so anything I can do to help you out with these videos is all about helping you on your journey to become a successful small business owner. Now, it's time to find some more money in your business. So the first thing we're going to look at is the difference between an expense and an investment. Now, if you look at both words individually, let's take the word expense. So the word expense means anything with an X on it means it's to go out. And the pence means it's about payment. So it's a payment that's going out. And most of our accountants will tell us that, your expenses are listed out on your profit and loss under your operating expenses. Okay, so that's where they go on our profit and loss statement. And the next thing we want to look at though is an investment. Okay, so an investment is the opposite. It's money that comes in. Okay, so whilst the money goes out with an expense, the money comes in with an investment. Now, your accountant will tell you that on your P&L, all those items on your business are expenses, in case what that means is all the money's going out. Now that's true to a certain degree, but there's one line item on there that actually can be turned into an investment. And that's your sales and marketing item. So today's video, we're going to look at, okay, how do we turn the expense that's listed as sales and marketing into an actual investment? So if we look at the word investment, bringing the money in, there's two key components that we need to consider. And an investment is all about getting return on investment. Okay, so that's our first one, the ROI. But there's another ROI that most people don't even know about, and that's return of your investment. Okay, so whatever capital you've put into an investment has to come back. If you're putting money into an investment and it's not coming back, well then that's an expense. So the sales and marketing line item on your P&L can be an investment, bringing money back in for a return on what you put out and what the amount is that you put out. You just got to know how to do it. So the second thing we're going to look at now is the acquisition cost. How much does it cost you to acquire a new customer for your business? Now, a lot of people, when I talk to them about this, will go, Brad, how the hell can you actually do that? How can I work out how much it's actually costing me to get a client? Well, this is the important bit, and it's something I call the golden question. And if you're not asking this in your business, then you're really shooting yourself in the foot. John Wanamaker, the famous advertising executive, said when he talked about his marketing, he said that I know half of my marketing works. It's just that I don't know which half it is when he's doing his marketing testing. Now, the thing with the golden question is it's going to be able to enable you to work out what's actually working really well with your market. And it's something you must ask all the time. Are you ready for it? Every time you get a new inquiry into your business, you must ask the prospect, how did you find out about us? Okay, so maybe they found out about you on your website, maybe it was via an email, maybe it's social media, but we've got to know exactly where they found out about us for us to be able to work out what this thing called the acquisition cost is. So let's do an example. Let's say that I'm going to do a sales and marketing campaign and I'm going to invest $1,000 into it. So see, I used a different language terminology there. I didn't say I was going to spend, because when you spend money, it doesn't come back. I said I'm going to invest $1,000 into it. So let's do our $1,000, and it doesn't matter what it is. It could be, like I said, social media, Instagram, local paper, television, doesn't matter. We've got a $1,000 budget that we're going to invest into this particular advertising campaign. Now remember what I said about investments. It must do two things. You must get a return on your investment, so a percentage return, but you also must get a return of your investment capital. So let's say we invest $1,000 in a particular type of marketing, and this particular type of marketing generates us 10 leads. In fact, 10 people who put their hand up and say, hey, I'm interested. Now we've been smart this time. We've asked the golden question for everyone who's ringing into our business and finding out more about it. We've said, by the way, how did you find out about us? And they say, oh, I saw your ad on whatever it is. Now, if this is related to where we're putting this $1,000, we need to keep track of that. Okay, so let's say in this instance, we've got 10 leads, people who have responded directly to our $1,000 ad investment. So what that means is we've bought a lead for our business. We've paid a certain amount. We've paid $100 and we've got a lead. Okay, so that's the first part. Now it comes down to a sales process thing. We want to turn as many of those leads who've raised their hand into purchasing customers, assuming we can help them the best that we possibly can. So let's say in this instance, we've got a conversion rate of 50%. So every 1 in 2 people who contacted us in this campaign actually bought. So we had $1,000 and we had 10 leads and we had a 50% conversion rate. That means we've got 5 new customers. So what did it cost us per new customer? Well, it's $1,000, 5 customers, so it's cost us $200 to buy a new customer. That's how we work out what our acquisition cost is for that particular marketing campaign. Now we want to be doing this for any of the marketing campaigns that we're doing. Remember, if you're liking the videos and you want to find out more information, subscribe down below, give the video a big like, and I'd love to help you some more with these particular videos. Now it's time to work out the third part, lifetime value. Now, you might be thinking, Brad, how in the hell do I work out what this lifetime value thing is for a client? Well, it's a lot easier than you realize. So let's imagine we are going to take a time snapshot window of, say, 2 years. So we're going to look at all the customers we've had in the last 2 years. How are we going to work out what the lifetime value is? Some in that window, some of them might have only bought once, some of them might have actually been buying once a week. So here's how we do the calculation for that. Number 1, count up how many customers you've had in the last 2 years. Now let's say, for instance, in this instance, we're going to go with 100 customers in the last 2 years. And let's say the next part is we add up all the sales from those 100 customers and we calculate that we've had $50,000 worth of sales from those customers. So some of them spent a lot and some of them spent a little, some of them spent regularly, some of them spent once, but let's say $50,000. So to work out what our lifetime value is in that window, what we need to do is take 50,000 divided by 100. So 50,000 divided by 100 gives us $500. So that will give us the lifetime value. So that's an exercise you want to do in your business. Go away and add up how many clients you've got, count how many you've had, count how many sales total for all of them, and divide the sales figure by the number of clients, and that will give you your lifetime value. So now let's bring it all together. Let me show you now how your business can be better than any return you're going to get on the stock market, the bank, or anywhere like that. In this instance, we've worked out that it costs us, our acquisition cost was $200 per client. And we've also used an example of we've got a lifetime value of $500. Can you see where this is going? My question now for you is, if you knew, and this is something to ponder, that every time you spent $200 to get a new customer, that they were going to be worth $500 to your business, how many times would you run that? Now here's the question, we don't know yet. That's the revenue. You would need to see what the margin is that you've made on that, okay? You'd need to include some of your fixed expenses and the rest of it. But let's say that out of the $500, you actually get to keep $300. Okay, so once you've taken out cost of goods or overheads or whatever it is, the sales that came in was $500 and you get to keep $300 of that for your business. Now, we spent $200 to get $500 worth of revenue, but we actually, after costs, get $300 back. So now we've got $200 out, $300 back in. That ticks the boxes on our rules for investment because we've got our money back in, the $200 that we laid out to get this particular customer, and we've got a return of $100 on top of that. Your business can be better than a bank, and I'm going to tell you about a client I had we did this once upon a time with. Literally, imagine what your business would be like if you knew for every dollar you invested in your marketing, you knew exactly how much was going to come back. And I've done this with so many clients these days. It's one of our goals because now your business is a bank. We put $1 in, we get X dollars back. We used to have a plumbing business that I work with that we knew for every $1 in marketing we put in, we got $4 back in profit to the bottom line, a 400% return. Now we're generally talking about, a 12-month period, but this made it really easy for us as well because we knew then, okay, how much profit do we want to make this year? We knew all our figures because we tested and measured all of our campaigns, so we would kind of just slice and dice where we put our marketing money to generate the profits that we needed. And that's how your business can become a bank. So if you've enjoyed the video today, learned some ideas, hopefully go away and put it into play. My idea of this is to help small business owners make more money. If you'd like to find out more information, there's plenty of resources down below. You can click, get in contact with me. Specifically, there's a free financials cheat sheet down there today. If you want to grab that, it's going to help you understand the margin bit, which is what we didn't really go into today. Love you to like the business, like the page here that we've got, and also subscribe and keep watching. I do a video, comes out this time, Mondays, every Monday, usually about this time, and look forward to helping you again with other ideas in your business. Bye for now.